Welcome to GRA TV, your trusted source for tax information. My name is Annalisa, and I'm here today with Mr. Lawrence Hochunyame, who is here with us to explain income taxes. Hello, sir. Welcome to our studio.
Thank you. Nice meeting you.
Nice meeting you too.
Yeah.
I know this is a topic that our taxpayers are always asking about on social media, so we decided to invite you here today. Let's just get into it and understand income taxes so that we can do the right thing.
Okay. Thank you.
So let's start with the basic question. What is income tax?
The law, the income taxation is governed by the Income Tax Act 2015, Act 896. So generally, taxation is governed by an act of parliament, and that is the act that governs the administration of income taxes. The law specifically did not define income, but what the law sought to do was to classify income into three main categories. Income from business, income from employment, and income from investment. And so any person who earns any of these three classes of income is obliged to pay taxes on that income. And so when you earn an employment income, or you receive an investment income, or you earn a business income, the law imposes an obligation on you to disclose that income for tax purposes. So generally, income tax is any earnings from either your employment or from your business that you are doing on day-to-day basis, or any earnings or income from investment that you have. I mean, the law requires that you make disclosure to the Commissioner General and pay taxes on that income accordingly.
Okay, thank you. What are the different types of income taxes? I'm sure the law has specified what those are, if you can explain to us.
Like I indicated in my introductory remark, we have three main classes of income. So when we refer to the first one, which is employment income, it is the total of your earnings from employment.
Okay.
So anybody who is exercising employment is under obligation to pay taxes on income that is paid to that individual from employment. And the law specifically gives us classes of payments. So for example, when you earn salaries, wages, allowances, gratuities, bonus payments, overtime payments, any payment either paid in cash or in kind, the law says that we should add them together and subject them to tax. The question most people may ask is that, okay, if the benefit is in kind, how do you get it? The law provides for a method of quantification. So when you receive anything in kind from employment, we look for the market value of what you have received in kind, and we add it to your income and tax. And so that has to do with employment income. When you come to business income, you know, business basically involves trading, selling and buying and all that. So the law provides that anybody who receives income, we call it consideration received in respect of business. Once you trade and you sell things and you receive, you would have to disclose that income for tax purposes. And when it comes to investment income, there are various types of investment income. It may take the nature of dividend payments, interest payments, royalties payments, rent income that is paid or received by somebody. All these ones falls under investment income. And once you receive any payment in the nature of employment or in the nature of business or investment, the law imposes an obligation on you to make a disclosure of that income to the Commissioner General for tax purposes.
So I'm assuming this applies to corporates or businesses as well, not just individuals.
Yes,
right?
Exactly. Yeah. So in actual words, the law says persons, and the persons then mean companies, limited liability companies. It also refers to individuals or partnership or persons that are operating as a trust or even charitable organizations. So it cuts across all persons. For companies, their profit is what we call the tax, the income tax. So profit of companies is what we are referring to as the income of companies. Are you getting it? So we call it the corporate income tax. And then for individuals who are into sole proprietorship businesses and so on and so forth, we call it the personal income tax. So these are classes of income that they receive from their day-to-day activities. So in this country, once you earn income from either employment or you earn income from business or you earn income from any investment that you have, the law imposes obligation on you to disclose that income to the Commissioner General for tax purposes.
Okay, so are there any exemptions? Are there, for example, any groups that for some reason are exempt from paying income tax?
Yeah, for purposes of reference, I'll refer to Section 7 of the Income Tax Act. Section 7 of the Income Tax Act 2015 at 896. That very provision gives a long list of payments that should be exempted from tax. For example, pension income is exempt from tax. Pension income in this country is not liable, it's not subject to tax. Income of public corporations are exempted from tax. So public corporations like GRA, VRA, ECG, their income.
That's the company, not the individuals.
That not the
there.
individual, the public corporations.
Yes.
The public corporations, their incomes are exempt from tax. The district assemblies, whatever IGF that they generate is also exempt from income tax. And then there are several other incomes. For example, the income of a cocoa farmer. The income of a cocoa farmer from the production of cocoa itself is not liable to income tax. We have others such as income from state-owned and state-sponsored educational institutions. So income from state-owned and state-sponsored educational institutions are exempt from tax. And then we could also refer to income that is earned by interest that is paid to resident individuals by resident financial institutions. Okay. Interest paid to resident individuals by resident financial institution is also exempt from tax. Of course, income that is paid to individuals that are covered by the Diplomatic Immunities Act, individuals that are covered by the Diplomatic Immunities Act is also exempt from tax in Ghana. So the list goes on and on. We have it specifically mentioned in Section 7 of the Income Tax Act.
Okay. So as a taxpayer who is receiving income from my employer, how do I account for these taxes paid to the GRA?
Yeah, so there are two ways of making a disclosure. The first one is that your employers have the obligation to withhold. So all employers are withholding agents. And so every employer is under obligation to withhold taxes when they are making payments to their employees. And that when that amount is withheld at source, the law says that they should pay it to the Commissioner General on or before 15 days following from the month when the payment was withheld from their salary. So the first obligation is on the employers. And then the second obligation is on the employee. And that one means that at the end of the year, all employees are under obligation to file their personal income tax returns. That is at the end of the year. And that returns ought to be filed at the end of the 4th month, after the end of the business period. And that will be 30th April. By the close of 30th April each year, all individuals, sole proprietors, employees, partners of partnership, all of them are under obligation to file their personal income tax returns. And in filing that return, they would have to disclose all income. Okay. And of course, like I indicated earlier, income from employment, income from business, income from investments, you would have to disclose your total income. Not only the income that your employer pays you, but income from all other sources. And then the Commissioner General will rely on that returns to be able to determine your taxes accurately.
Okay. So when my employer withholds, which is what we call the PAY, pay as you earn, and then they pay it to GRA on my behalf, how am I sure that this payment has been done? How can I verify this?
Yeah, so we currently running an IT platform called the GitMix 3. The system provides that once a withholding agent makes payments on behalf of a withholdee with the unique tax identification number, automatically the payment is credited to the withholdee's account. So the amount paid will be credited to your ledger. So you can just walk into any of the GRA's account, and you can check your
Oh,
balance to be sure that monies that are being deducted are sourced from your salary is paid.
okay.
It will be credited to your account, and it will reflect in your taxpayers ledger with GRA.
Okay, so thank you so much. So this is for the PAYE, and like you said, I still have to file for business income from employment, from business, and then from investment.
Exactly so.
So for the other ones, I will make the payments myself.
Yes, there are several classes of incomes. Those that you receive directly, you would have to make disclosure on those incomes. For the employment income, the obligation is on the employer to withhold on your behalf. But the other classes of income, there are individuals who are earning multiple sources of income. They are in employment, they are at the same time engaged in business, and then they also have investment assets that they're receiving investment income. So when you're earning income from all the three sources, then you would have to make the disclosure to the Commissioner General from the other sources. But when it comes to employment specifically, the obligation is on your employers to do the withholding on your behalf. But that withholding is not final. At the end of the year, as an employee, you are under obligation to file your personal income tax returns to the Commissioner General.
Welcome back to GRA TV, your trusted source for tax information. We are here with Mr. Lawrence Hochonyame, and we have already gone through the different types of income taxes we have. We've discussed PAYE, income from employment, business, and investments.
Exactly so.
Yeah, so now we want to really delve into how personal income taxes are calculated. So when I gather all my income and I present to GRA in my returns, how is it calculated? What is added? What is taken out?
All right, thank you very much. There are specific rules that governs the calculation of your taxable income. So the law provides for what we call the accessible income. The accessible income is the total of your income. So it's the total of your income from all the sources, right? If you earn only business income, then it would be total accessible income from business. But like I indicated earlier, there are some that earn business income and they also earn employment income. So would get total accessible income from all the sources of income. That's the gross amount. The law provides that we should allow you legitimate legal deductions, legitimate outgoings or legitimate expenses or legitimate reliefs. These are reliefs that you are legitimately qualified to claim. So, for instance, if your total income is 100 Ghana cedis, and we calculate all your allowable deductions, your reliefs, your claims, and your total allowable deduction is up to 60 Ghana cedis, then it means that your chargeable income will be what? 40 cedis. Okay. So the method of calculating your income tax or the income that we subject to tax is to determine your accessible income. We take out all other deductions or reliefs. We subtract the deduction and reliefs. We arrive at your chargeable income. It is on the chargeable income that we calculate the tax. So the tax is calculated on the chargeable income. So you could have a situation where the accessible income, like I indicated, is 100. All the expenses or allowable deductions or reliefs totaled 60. It means that your chargeable income will be what? 40. So it is on the chargeable income that we calculate the tax. Now, when I say allowable deductions, we need to clarify it a bit. For individuals in employment, we're talking about your personal reliefs. So if you're an individual and you are in employment, you may be entitled to marriage relief. We call it marriage and responsibility relief, or child education relief, or disability relief if you are disabled, or your aged dependent relief. If you have your aged parents depending on you, and you are providing for them the necessities of life, we call it the agent dependent relief. Or even if you're an individual and you're above the age of 60 years, we call the old age relief. All these things are reliefs that you are entitled to. And so we add all the total reliefs, we take it out from your assessable income, and what we get is what we call the chargeable income. It's on the chargeable income that we apply the graduated rates for individuals. And that PAYE is paid on a monthly basis. The current rate that we are using, I mean, it's pending an amendment, but what we are using currently, if I say graduated rates, these are the rates we've been using for the past year, 2022, which we are currently using in 2023, but it is subject to amendment. But currently, if your monthly income, that is your chargeable income, is 365 Ghana cedis and below, then it means that you are not liable to pay income taxes. So if your monthly income is 365 Ghana cedis and below, you are not liable to pay income taxes. And then when your monthly income increases to 475, 475, the first 365, you are not liable to pay anything. The excess, you pay tax on the excess at the rate of what? 5%. That is how it is calculated. When your monthly income is 605, for example, that is at the third level on the graduated rate, the first 365, you don't pay anything. The next 130, you pay 5%. And then the excess, you pay tax at 10%. So these are the grades that we use. We use the graduated rates. And these rates are available on our website. Anytime you want to have access to the rate that is used, you just go to our website and download the rates, and then you apply. So this is one way of calculating the taxes. We determine your assessable income. We grant you all the allowable deductions. I get it. If you are in a private business, your allowable deductions could include your expenses, your day-to-day expenses from your business. It can be your travel, your transport and travel expenses. It can be interest on loans. It can be repairs and improvements. It can be any other expenses that you incur as an individual in running your day-to-day businesses. If you're in business, we'll take out all your expenses. And then we arrive at what? Your chargeable income. And then we apply the same rates on your chargeable income. For employers, like I indicated earlier, all employers are withholding agents. So the employers are under obligation to use these rates to withhold the taxes at source when they are making payment to their employees. So every employer is a withholding agent, and the law imposes obligation on all employers to withhold using the graduated rate and pay the withholding to the Commissioner General. Our point of caution is that most employers withhold and they do not pay. It is an offense against the tax law for you to withhold the taxes from your employees as an employer and refusing to make such payment to the Commissioner General. The law has also provided for timelines for payment. It says when you withhold the taxes, you should pay not later than 15th of the following month. And it's very important. So there are two ways of methods of calculating the taxes. The first method is the withholding by the withholding agent, which should be done at source and paid to the Commissioner General on or before 15th of the following month. And then the second one is the disclosure that the individual makes himself. That one, we determine the assessable income. We take out all allowable deductions. We arrive at your chargeable income, and then we calculate your taxes using the graduated rate. So for the information of our tax-paying public, the tax rates are available on our website. And anytime there's an amendment, we immediately update it on our website.
So what are some of the obligations of a taxpayer?
Yeah, thank you very much. Our cherished taxpayers have 4 main obligations. The first one is to register with the Commissioner General or to register with GRA. That's the first primary obligation of all taxpayers. So taxpayers and potential taxpayers, you are under obligation to register with GRA wherever you are. Once you earning income or you are engaged in business, the law says register with GRA. And that is the first obligation. The second obligation is filing of returns. And the filing of returns is very important to the Commissioner General, because that is the information that we need to be able to calculate your taxes accurately. If you are entitled to reliefs, until you file returns, we cannot grant you the reliefs. If you are entitled to a refund, until you file a returns, you cannot get a refund. So filing of returns is another obligation, very, very important to the Commissioner General. You file your returns, and there are due dates for filing returns, which I will indicate. Then the third obligation is payment of taxes. Once you register and you file your returns, you are also under obligation to pay taxes on due dates. Taxes are supposed to be paid on due date. And then the last obligation is to make honest disclosures. We call it make full disclosure of your income and make honest disclosures of your income. We do not want any taxpayer to mislead GRA. In actual fact, it is an offense. It is an offense to make a false and a misleading statement to GRA. So you make, these are the four obligations. The first one is registration, followed by filing of returns, payment of taxes, and making full and accurate disclosures of your income declaration, or your declaration of your income and expenses. Now, let me narrow it down to filing of returns. It's very important you file returns so the Commissioner General will be able to determine accurately the taxes that you are required to pay. If you do not file a return, you have committed an offense under the tax law. And so all taxpayers are supposed to file returns. There are various forms of returns. Like I indicated earlier, there are returns for withholding taxes. And all withholding tax returns are supposed to be filed on a monthly basis. And the law says that it should be filed on or before or within 15 days following from the month that the transaction occurred. And so all withholding tax should be filed within 15 days following from the month from which the transaction occurred. Now, the second class of returns we have is the annual returns. So all persons earning personal income tax, corporate income tax, the law requires you to file your annual returns. And the position of the law is that the annual returns should be filed 4 months after the end of your business period. And so for most taxpayers, their business period runs from January to December. And if your business periods run from January to December, you have 4 months after December to file your annual returns. And so in the year of 2023, the due date for filing annual returns is 30th April. That is the due date for filing annual returns. So all persons, individuals, companies, partnership, trust, charitable organization, the law imposes obligation on you to file your annual returns on or before 30th April 2023. And that is very, very important. You must do your returns. Now, GRA has gone online. The beautiful thing is that you can file your PIT return and your CIT return, all your returns online. You just go to our website. The link is provided where you can file these returns online. The due date is 30th April 2023. Now, when you fail to file your returns online, these are some of the consequences. The law would impose a penalty. For a default for each day, you have a penalty of 500 Ghana cedis. And for each day that the default continues, for every day you are required to pay a penalty of 10 cedis in addition to 500 Ghana cedis. That's the base amount. So if you default in filing your returns for 1 day, it will be 500. It's 2 days, it will be 510 cedis. If you default in filing your returns for 3 days, it will be 520. 4 days, 530, and so on and so forth. For each day that the default continues, the penalty of 10 Ghana cedis will be added to the base amount of 500. And so I want to encourage all our cherished taxpayers that in this month of April, in this month of April 2023, that is the month for the filing of annual returns for all our taxpayers. Personal income tax, corporate income tax, and all our returns are supposed to be filed 4 months after the end of the basis period. So please kindly take note. But for those who are on self-assessment, all self-assessment returns are required to be filed 3 months after the end of the basis period, by the close of the first quarter. So we are now in March. By 31st March, we are expecting all self-assessment estimates to be filed to our various offices. And you can also file all your self-assessment estimates online. You can do those declarations online via our portal. Thank you.
Thank you so much. So now I really want us to understand the income taxes or the personal income taxes that are not applicable to these rates. So for example, I'm assuming this is for resident individuals. So when it comes to non-resident individuals, how does it work? And then the other tax types that these rates don't apply to, if you can explain those to us.
Right. Thank you very much. We have thank you very much for this very important question. We have two main class of taxpayers. You are either a resident person or you are a non-resident person. We have a lot of non-resident persons doing business in Ghana, and when you are a non-resident person doing business in Ghana and you earn a chargeable income, your chargeable income is subject to tax at the flat rate of 25%. Okay. So all non-resident persons doing business in Ghana, the chargeable income is subject to tax at the rate of 25%. Okay. Now, there are several classes of incomes that are not subject to tax using the graduated rate. For example, one typical example is rent. Rent is an investment income that suffers a final withholding tax of 15%, especially when the rental property is a commercial property. When the rental property is a commercial property, in other words, the tenant is using the property to conduct business, to run business, then when the tenant is making payment to the landlord, the tenant is under obligation to withhold 15% and pay to the Commissioner General, pay to GRA. That's very important. Because rent is an investment income, the obligation is on the tenant to withhold. If the tenant fails to withhold, the law says that the Ghana Revenue Authority will surcharge the tenant for not withholding. So the obligation is on all tenants that are making payments to their landlords, especially when the payment relates to business, to withhold the taxes at the rate of 15%. I just need to quickly explain that individuals occupying residential premises are excluded from withholding. So if you are an individual and you have rented a premises, you have rented a place where you are living, your dwelling, the law says that if you are an individual and you are making payment to your landlord, you are excluded from being a withholding agent. Individuals in that circumstances are not required to withhold, but the obligation to pay the rent tax now shifts to the landlord. The landlord will have to come to our offices, disclose the rent income received, and pay taxes accordingly. Thank you.
Thank you so much. We have learned a lot about both corporate income tax and personal income taxes. So as you heard Mr. Lawrence Hochonyami saying, a lot of this information is available on our website, gra.gov.gh. You can go there and you'll get the graduated tax rates. You will get the explanations for the different tax types that we have so that you can understand it better if this video doesn't explain it all to you. Thank you so much. And until next time, this has been GRA TV, your trusted source for tax information.